Welcome to today's episode. We'll be taking a deep dive into both the technical and fundamental aspect of Bitcoin and Ethereum. So, but before we proceed, let's just take a quick market summary of Bitcoin and Ethereum. So, first, we have a total crypto market cap of 974 billion. While the BTC dominance here is 38.3%, while ETH is 16.8%, while the gas fee on Ethereum is 11 Wei, which is the cost of making a single transaction on Ethereum. Now, BTC is sitting at a market cap of 372 billion USD, while Ethereum is sitting at a market cap of 163 billion USD. Okay, now let's take a deep dive into some of the fundamental aspects of BTC. Okay, this is Sandbase, a place where I carry out my fundamental analysis on any project I want to invest in. So they will give you a lot of data on that particular project. Now this is the data on Bitcoin. Now you see we're sitting at 19,400. So exchange flow balance simply shows the difference in the amount of BTC tokens moving to and out of exchange wallet. If the value is positive, more BTC enters the exchange than have left. If the value is negative, more BTC flows out of the exchange than flow in. So let's take a look at it now. The value is sitting at what? Minus 362. You see, we're having a negative value. That means more BTC has left the exchange than the one that has come into the exchange. So why the exchange flow balance? The exchange flow simply shows the amount of BTC moving to non-exchange wallets daily, excluding the one that's moving from exchange to exchange. Spike in this matrix may indicate a rise in short-term selling price. So let's check it now. You see the only spike we've had is downward. You see, the only spike we've had is downward. That is most of the BTC already left the exchange. You get most of the BTC already left the exchange. So many BTC is not. We don't have that much BTC left in the exchange. If we check it from this thing now, you see we're sitting at below all-time low. If you check it now, see below all-time low, which is 35k, the lowest we've had. If I'm not mistaken, 10.7k, which is the lowest we've ever had. You see, even at this point, I'm not sure we had that low. So why this is the supply on exchange as of the total supply of BTC. You see, we're at 9.2%. That is, we have 9.2% of BTC on exchanges. You get. So why the main coin age shows the average amount of days that all the BTC tokens stayed in their current address. Rising slope signals a network-wide accumulation trend. Like for instance now, which is this upward slope, it signals accumulation. That is, a lot of people have been accumulating, a lot of ways have been accumulating. That's why you see we're just rising gradually. Why the MVR ratio shows the average profit or loss of all BTC holders on the price when each token last moved. If the MVR is equals to 2, then all BTC holders are on average currently 2x on their initial investment. Now it's sitting at minus 8.6. That is, they are on an average of minus 8.6x loss. You get. So with all of these parameters which we've just taken a look at, if you combine all, you turn to get a narrative of are we at the bottom? That's the question you get to ask yourself with all of this parameter I just read now. You see, one way or the other, you see if we are not at, like, let me not say if we are not at the bottom, but we're very close to the bottom. Let me be realistic to you. We're very, very close to the bottom. That's if this is not the bottom. If this is not the bottom, I'm just trying to explain some of the fundamentals surrounding the BTC market, to be specific. Now, okay, so let's take a look at the technical aspect of BTC. Now, this is the daily time frame. You see, we're currently sitting at $19,388. Now, let's see. Yesterday we had a little spike. Yesterday, and let's go to the 4 hours time frame. Okay, this is the 4 hours time frame of the BTC chart. Now you see, yesterday we had a little spike. See, we tested this resistance level, which is this white line you see here. We tested it on this resistance level. Now we're having a retest. We broke out from this. Let me mark it out so you notice it. We broke out from this resistance level, this previous resistance level, this one here. You see this green line here. We broke out from this one there. So now we're coming back to test it again, which is on the 0.61 Fibonacci retracement level, the 0.61 Fib retracement level. You see, we're coming back to test this level. So for those looking to before I proceed, this is not financial advice. This is just strictly for educational purpose. So if you're watching this video, just know I'm not a financial advisor. So this place, a lot of people will be coming in, a lot of buyers will be coming in, will be stepping in here at this 0.61 Fib retracement level. A lot of buyers will be coming in here. So I think that should be a strong support. Let me just call it a support. That should be a strong support. That's if we're reversing, if we're going upward from here. But if we're not, then you should be looking to set your stop loss around this level. So that if we break this trend, just know we're coming back to this region. You get? So, but I doubt we will, because there's an article from Wall Street Journal and another one from investing.com. It shows this is the one from Wall Street Journal. Okay, this article here just basically points to these things we should be looking out for this week in the market. The things we should be watching out for this week in the market. This week we're having some mega cap earnings, which is the earnings of some of the tech giants of the US stock market, which consists of Microsoft, Alphabet. Secondly, the US is to release the US GDP. So the US is to release its first look at third quarter GDP on Thursday, with the economy expected to expand at an annual rate of 2.1% after 2 consecutive quarters of contraction in the first half of the year. You know, the US economy during the first quarter, it took a little bit of contraction. So we'll be getting the third quarter, which is this week as well. So pay attention to that. The ECB rate hike, which is the European Central Bank, their rate hike, they will be going for a 75 basic points rate hike on Thursday. So you should pay attention to that. And the UK just lost their Prime Minister Liz Truss. She has decided to step down, which is resigned from her position as the Prime Minister. So they will be the Conservative Party. They will pick another person to replace her, which some of the people which stand in the chances of coming back are Boris Johnson and former Chancellor Rishi Sunak and Penny Mordaunt. So that's another thing to look out for. While in the Asian market, China, investors will be awaiting the release of the delayed Chinese economic data, including the third quarter GDP figure, along with report on trade, retail sales, industrial products, and the housing market for September. Those data were delayed because of the ongoing election in China, but it's the oldest thing is over now. Xi Jinping got his third term, so those data will be coming out this week too as well. So those are the things you should be looking out for. While this article from Wall Street Journal, I'll put the link in the description, in my description below. It basically just tells you this. Previously they said November the market has priced in 75 basis points from the Fed, but it seems we might not be getting the 75 basis points anymore because with the outlook of things, it seems the whole situation is getting a bit better. Let me not just say a bit better. So they might, and according to their last speech, they say they will slow down on rate hikes. So hopefully the slowdown will start from November. So if it starts from November, that means we might likely get, instead of a 75 basis point, we might likely get a 50 basis point. If we get a 50 basis point, that means the whole market will rally, and we'll be seeing some signs of 50 basis points from, like, for instance, now Apple, their stock moved before market closed on Friday. So and so some other yield bearing assets too, they still rally. They took some rally. So let's just see what the week hold, and we're able to tell which direction we'll be going from there. Okay, that's that on the news aspect. Now let's take a look at Ethereum. Good. This is token terminal. One thing I love most about token terminal, it shows you not just the TVL, the revenue the project is generating. You get, aside from just the TVL, it shows you the revenue the project is generating, and shows you the amount they are spending on fees. You get, it shows you a lot of other data. Let's just take a deep dive and see for ourselves. Now this is circulating market cap and revenue 30 days. You see Ethereum still has a $69 million revenue in the past 30 days. While active users for the past 30 days, it dropped by 31%. 31% in terms of active user in the past 30 days. That's to tell you the whole market has been very slow for Ethereum of all projects to drop in terms of active user. Ethereum is not just the backbone of DeFi. You get, not just the backbone of DeFi, including NFT and Metaverse. You get, Ethereum is the giant. You get, so whatever you see happening on Ethereum, you have a ripple effect on the rest of the market. So this is daily circulating my market cap versus the fee. You see the circulating market cap versus the fee. You see, we still, if you check it, you see we're coming down a bit. Why this is the circulating market cap and the fee. You see, this is revenue generated on Ethereum. If you check it, if you see here, we had a huge spike on revenue. That's last time we had this spike was in May. Though this one is in April. See, April 30th. This is the last time we had this spike. April 30th. You see the revenue drastically dropped in revenue. If you find this tutorial helpful, don't forget to click the like and subscribe button for more content like this. Thank you. See you next week.